Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. First day of September 2017, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have seen, with gold closing at a new record high for the year, trading currently at $1329.90, putting it up about $7.70 on the day. It traded to a high above $1334, and that is the new record high for the year. A 2.5% gain this week alone. Of course, we did enter a long position in gold a week ago Sunday. We got in at $12.99. Market is well above that. We'll talk about our current trade in detail as we pull up our technical studies. Silver, also a runaway freight train, up 23 cents today, closing 20 cents shy of $18 at $17.80. And that in light of a fractionally moderately higher US dollar, up about 14 points at 92.76. The tepid jobs report that came out did not stop the U.S. equities from moving to higher ground. Dow Jones Industrial Average up 39 points and still just behind that 21,987. NASDAQ up 7 at 6435, and the Standard & Poor's at 2476. Traders, as we go into the end of this week and the beginning of a 3-day holiday here in the United States, Labor Day, we have to pause, take a breath, and acknowledge what type of move we have witnessed overall in gold pricing this week. Gold currently trading at $1330, up about $8, traded to an intraday high of $1334.50, is absolutely closing at a new record high for the year and a substantial gain on the week. If you recall, on Sunday of last week, we made a recommendation by sending out a trade alert to initiate long positions. We entered the market below 1,300, going long at approximately $12.99, and originally we had placed a stop below Friday's low that was present in the market at around $12.80. This week we have maintained our long position, but we have also now moved our stop up to just below 1,300. We have a sizable move in the market, and on today's show, I want to cover where I think we could see the market head, short term as well as long term. Take a quick look at silver along with our recommendation. So traders, we are looking at a weekly candlestick chart that we've had a sizable move this week, considering that the market opened just under 1,300 and is closing at or above 1,330. As I said, we're not into settlement yet. On yesterday's show, I started to talk about a couple of different strategies for scaling or adding to our position. And in essence, what we were looking at is various levels that are based upon a Fibonacci extension. And these levels, if in fact gold takes those prices out, are the points at which we would want to consider adding to our current position. And also for traders that just joined us this week and are awaiting a signal to initiate a long position, that would be your cue to enter the market from the long side. I still believe in terms of an upside target over time, we have a real potential to reach 1363 to as high as 1381. And the key with 1381 is if in fact we are in a bullish market. We have got to take out these former highs to keep the pattern going. And the pattern that I'm talking about is a pattern that developed in this market following the fall from grace 1900 to approximately 1040 back in December 2015, January of 2016, when this bear market came to a conclusion and a market that was genuinely different. For the first time since the market began to fall, we had a scenario in which we had a higher high than the previous high, and as a market came down and created a low, we had a higher low than the previous low. That, in the most simplistic terms, is how a technician gauges a bull rally, a market moving to higher ground. And up until this most current point, we've had the series of higher lows, but we have not fulfilled that higher high yet and cannot fulfill it unless we move above this price point. The events currently in the market that are fueling this rally are events that will continue or be persistent over the next year, and therefore I am looking for substantially higher pricing in gold. Now, in terms of our actions next week, what I want to focus on, of course, at the beginning of the week, that would be Tuesday. We will be closed for Labor Day on Monday. We are going to look at areas in which it makes sense to trail our stop up. Our stop is sitting below 1,300, and the market has moved substantially above that price point. Traders, the next price point I'm looking at in terms of stop placement is 1317. It is a Fibonacci-based stop point. It is the 78% retracement from a large move accounting from the yearly high of last year to this year's low. 78% takes you to 1317. We can see on a historical basis that there is some technical evidence that this particular price point should provide some pretty eloquent support, considering if the market continues to track higher. Therefore, my recommendation is to maintain your current long in gold and to maintain your current stop. Silver is also in a dynamic rally mode along with gold. Tremendous move this week when we look at silver pricing, now trading at $17.80. Considering that it opened at around $17 this week, we have seen a pretty strong rise in the precious white metal. Now, what are my targets in terms of silver? A 1-to-1 relationship, and I have a basic fib extension that I have added to this particular chart, takes the price of silver to $17.90. A 1.38 extension takes us approximately to $18.90, which also corresponds with this top that occurred in April of this year. Therefore, my initial target in silver, assuming that gold breaks to the upper ends that we were talking about, I wouldn't be surprised to see silver go as high as $18.60 with a really top in play and major resistance coming in at $19 per ounce. Traders, we had an awesome week here at the Gold Forecast with subscribers participating in a pretty dynamic trade, currently up about $30, which represents $3,000 per $10,000 investment. In other words, a 30% return this week alone, assuming we can hold on to that. I want to thank our new subscribers because we had an overwhelming response to our offer of letting you have your first month at $19.95. And traders that took that advice and got in and also put that trade on have far exceeded any costs that the Gold Forecast could incur over the next 1 or even 2 years. For those of you that did not participate in that special, we always offer a week free trial to test out the Gold Forecast. And to that end, had you done just that last week and taken our call, you would have produced a 30% profit. So traders, for those of you that are with me, we had a great week. I'm looking forward to a much better week next week. And for those that are still thinking about it, gold, I believe, is really getting itself set up for a much higher move, at least $13.50, as high as maybe $1400. This has been Gary Wagner wishing you as always good trading. Have a great 3-day weekend. We'll talk to you on Tuesday for another daily update and review. Bye-bye.